With most investors going about life, investing, and retirement planning as if nothing unusual has happened to our financial system, not realizing the repercussions of the 11 trillion that's been pumped into the US financial system in the past 18 months alone. I just want to share with you a report we have just put out. At least 4 billionaires have stated publicly that Americans aren't paying enough attention to this development. And now a former Goldman Sachs banker says sooner than most people think, millions of Americans will potentially be pushed down out of the middle class, out of private retirement, and out of a decent life based on independence and privacy into a collectivist nightmare he calls financial lockdown. So find out how to protect yourself, your money, and your family with a free copy of his new report. In it, he'll show you the 4 steps he recommends that you take immediately. So if you'd like a free copy of the report, you simply have to go to 2022wakeupcall.com. Again, that's 2022wakeupcall.com. Hi, this is Daniela Cambone, and welcome back to Stansberry Research. Happy Monday. Well, U.S. stocks are swinging between gains and losses today as Wall Street is trying to shake off a brutal month that saw the Nasdaq Composite suffer its worst stretch since 2008. Also having a very bad start to the month are gold prices. Disappointing manufacturing data is not providing any bullish momentum for the gold market. There's massive selling pressure here. Joining us today to unpack all this is Todd, Bubba, Horwitz of BubbaTrading.com. Welcome back.
Danny, it's always great to be with you, especially Fed week and on a rotten Monday.
Fed week and a lot happening this Monday. Let's start with gold prices because, you know, I said I'm going to bring you on because you were telling me, get ready, fasten that seatbelt, gold prices are about to take off. As we're speaking today, gold futures last trading at $18.59 an ounce, down 2.7% on the day. Oof, that hurts.
It does hurt, and it's easily predictable as you've watched the price action coming in, and we thought there was going to be a big move, and it looks like we're going to test the 1800 level. You know, you've got a couple of factors working against gold right now. Inflation is not great for gold. Certainly high dollar prices, although the dollar continues to be devalued, but the actual price on the board continues to go higher. Right now, you're seeing a lot of wholesale selling of almost every asset class across the board. And gold and silver are really taking it on the chin. I mean, it looks like we're going to test. Silver's already broken down through some key levels, which looks like it's going to take it to maybe 21. And gold looks like 1800. If it goes through there, it could still go a lot lower. There's always room. But again, I think if you're an investor, I think this is a spot you should be looking to buy some gold. And again, if you're going to store it and you're not going to leverage yourself to buy it, but if you're trading it, you want to be on the short side now until it proves that it can start to go higher again. And that could be a while with what's going on this week with the Fed and with the overall economy, not only here in the United States, but worldwide.
So do you think it's also just coming back down here, anticipating in preparation for the rate hikes, or has that already been baked in?
I think it's pretty much priced in, Danny. There isn't too many surprises. In fact, there was maybe a little surprise this morning in the ISM manufacturing number, which is a private number, so it's harder for them to guess what that's going to be. There's not as much disclosure coming into it. But when you look at the pricing action coming into this, I think a lot of this is baked in. But I think really what's going to really determine when this Fed talks and what's going to happen to these metals is how the verbiage he uses in his speech afterwards. You know, the decision is, I think, baked in. I think it's going to be 50 to 75 basis points. And I think the markets are thinking 75. So if it's anything worse or better, it'll have an effect. But really his speech of what they're going to do going forward, because they are so far behind the curve that even with a 75-point basis hike, will still be nominally negative interest rates.
Let me ask you, what about that steep drop we saw in GDP last week? Will that change course for the Fed? Will that have an impact on them?
They may, but they may use it as an excuse to not do something. You know, they talk a good game, but they really have done nothing, right? I mean, they've only raised a quarter since they've been talking about raising every meeting. So you never know. You know, the Fed, unfortunately, which is supposed to be private, is really part of another leg of the government. And they're kind of helping along. So they're kind of watching the markets, which doesn't make a lot of sense because the markets and the Fed should have nothing to do. It's not part of their mandate to watch the stock market. Their mandate is to control the economy, which they've totally lost control of. This is their problem. They don't understand how markets function to begin with. So it could have an effect, and that could affect their decision, but I doubt it. They're stuck because inflation is the biggest problem, and it is getting dramatically away, not to mention the food shortage we're going to have, which is going to really spike inflation.
Yeah, I had sticker shock this weekend. $12 for 4 rolls of toilet paper, Bubba. Okay.
Wait till you buy bread.
I want to bring up a tweet from our friend Frank Justra, as you know, one of the most prominent figures in the gold space. I thought it was interesting that he tweeted this, and I want to get your reaction. He said, I have never been a fan of conspiracy theories, but my 45 years experience in trading markets tells me that someone is deliberately suppressing the gold price, especially in the past 2 years. I suspect we will see a reset in the global monetary system sometime soon. Any thoughts? Do you agree with him here?
Well, I think they may be trying to suppress, but here's my issue with those who believe the metals are manipulated. Okay?
Tell me.
You have to have, if somebody's trying to suppress it, there's got to be buyers buying it, right? Markets are two-sided. They are filled with price discovery. And if they were really trying to push them lower, then the buyers would walk away and nobody would be buying. So they may be trying to keep a lid on it, but overall, you still have to have a buyer. And if the buyer stepped away, you would see a dramatic fall. We have not seen it. Remember, we were just at almost 2,000. Okay, so now we're down, 10% from 2,000, or less than that, to 8%. So again, to me, there's a cap, but there's not a cap. If you look at a 15-year chart on a monthly basis, it really looks like gold is forming an extremely bullish pattern, which is known as a cup and handle. So I think that, when it does decide to take off, now again, where it's going to take off from, I don't know. But when it does, I think we run through the new highs. But until then, we're going significantly lower. And if you want to call it manipulated, I can live with it. I can hear it. There is conspiracy theory, certainly in the fiat currency system, which is the biggest fraud market in the world. So that we could look at. But overall, I still know one thing. There's got to be a buyer and a seller to make a market.
Okay, one more quote I want to share with you that came from this weekend from Buffett. He said, if you said, for a 1% interest in all the farmland in the U.S., pay our group $25 billion, I'll write you a check this afternoon. For $25 billion, I now own 1% of the farmland. If you offer me 1% of all the apartment houses in the country and you want another $25 billion, I'll write you a check. It's very simple. Now, if you told me you own all of the Bitcoin in the world and you offered it to me for 25 bucks, I wouldn't take it, because what would I do with it? I'd have to sell it back to you one way or another. It isn't going to do anything. The apartments are going to produce rent and the farms are going to produce food. So he still hates Bitcoin. Thoughts on his rationale when it comes to the crypto?
Well, first of all, I don't necessarily believe, you want to talk about a master manipulator, you could be talking about Warren Buffett. I will bet you anything that they're holding a form of Bitcoin or a stock in their portfolio that represents the Bitcoin. Okay, they can talk rat poison all they want. But of course he's right on the land. I mean, if you control the food supply, you control the world. If you control the real estate, you control everything. So again, I can understand his point, and they certainly make sense. However, the cost of producing food this year, there's going to be farmers that will not be able to produce on this land because of the overwhelming cost it's going to take them to get it. There's the input costs are becoming so ridiculous that it's going to be hard for a smaller farmer to make a living. We're not talking about a rational human being that's a normal work guy. We're talking a guy that's worth billions of dollars that can make those kind of statements. And how many people they can buy Goldman Sachs at 120 and hold it to $8 and not get out and panic? You're looking at it from two different stories. But again, I think he's right in concept that owning the food supply or the rights to it, like Bill Gates is trying to do, is a key thing, because you then control everything, because it always comes down to food. Just ask Marie Antoinette's fans.
Okay, let's just talk Nasdaq here a second. As I mentioned, it just concluded its worst month since 2008. As we're speaking now, in the green here. But where do you see the Nasdaq headed next few weeks?
I think we're going significantly lower, Daniel. To me, we are so overvalued and so overpriced in here that as I told you before, I think 40 to 60% is where we're going. And I think that the more that they try to fix it, which they have not done, and until they start pumping oil and bringing down this inflation, which they're not going to do, we're going to continue to see prices fall. There'll be rallies. There'll be, as we like to call them, rip your face off rallies in this market because the shorts will get overwhelmed and you'll get a spike. But remember, bear markets create the most vicious rallies anyways, and those are usually just another selling opportunity. And I think we're going significantly lower. You let those valuations get too crazy in Nasdaq and most stocks, which is why you're seeing this heavy selling and why it should continue.
Okay, final thoughts. If I had to wrap it up, you basically see no surprises coming from the Fed post-Wednesday?
No, I don't. I think they're going to raise 50 to 75. I think the street's priced in 75 based on the action. And they're pricing in a half a point basically every meeting for the rest of the year. So we'll see what that looks like. But again, they're still well behind. There's still negative rates nominally, and that's what we really should be looking at.
Todd Bubba Horwitz, thank you so much for joining us this Monday.
Thanks, Danny. Always great to be with you.
And thank you so much for watching. We'll have more coming your way on Stansberry Research. And don't forget to sign up at danielacamponi.com so you can stay up to date and know about the latest interviews coming your way. That's it for me. Thanks for watching.
Opinions expressed on this program are solely those of the contributor and do not necessarily reflect the opinions of Stansberry Research, its parent company, or affiliates.